Hi everyone, welcome to part 6 of Technical Analysis Made Easy series. In this video, I am going to cover technical indicators. So let's jump to the definition of what technical indicators are. So a technical indicator is a mathematical pattern derived from historical data used by technical traders or investors to predict future price trend and make trading decisions. It uses a mathematical formula to derive a series of data points from past price and volume. So we will see how it looks like on the chart. But before that, I just wanted to let you know the application of technical indicators. So technical indicators basically used in two scenarios. First is to identify overbought and oversold zone. Indicators, you can see overbought and oversold areas, which suggest that in case if the prices are in overbought range, so it suggests that now prices can move down, and if prices are in oversold zone, it suggests that now prices can move up. So technical indicators sound like very easy tool, because you can just see if it is in overbought area or oversold area, and then you can trade on the basis of that. But what I would like to suggest you that technical indicator doesn't work in isolation. So if you use technical indicators with the price pattern or candlestick pattern or support or resistance, it can help you in effective decision making in terms of your buying and selling decision. Second application of technical indicator is identification of trend. Technical indicator can help you to gauge how strong a trend is. And let's say if the trend is weakening and the indicator suggests that now trend is weakening, it can give you an opportunity to take trades on trend reversals. So we are going to discuss technical indicators in detail. I'll show you the application of indicators, how you can use the indicators to make buying and selling decision. So I've just listed out the most used technical indicators. And so if you see from from relative strength index, MACD and stochastic oscillators are used for overbought and oversold scenario. And these last two indicators, average direction indicator, which is also known as ADX, and on balance volume, are used for trend identification. So what I'm going to do is I'll just show you on the chart itself how it works. So friends, as we discussed in one of our previous video, you can use trading view for charting. It's a very user friendly charting tool, and it is available for free. So you can use a lot of feature for free using a trading view. And in case if you need premium services, then you can also subscribe for paid product. This is the chart of company called Apple. So let's first discuss relative strength index. I can add indicator from here. So we're looking for RSI. Okay, so we have RSI on our chart. You can note 30 over here and 70 over here and line across. So this 70 is the overbought area and 30 is oversold area. So, so anytime if this blue line goes above the 70, it means that it's an overbought area. And if this blue line is below the 30, it means it is an oversold area. Strategy is you don't sell as soon as it reaches the 70. What you have to do is you have to wait the prices to go down, okay, and at least reach the 60 level. And if it goes below the 60 level, then you can sell from there. And also you have to take a note on chart, like what is happening in the chart. So this is how you can trade using RSI. Let's switch to MACD. This indicator that you can see on my screen is MACD. The full form of MACD is moving average convergence and divergence. So basically what happens in this indicator is you have a line over here you have some bar on the top and bars at the bottom. These two data points are very important, the one in the blue and the other in the yellow color. So the strategy in MACD is, as soon as the blue line crosses the yellow line, it's a buying opportunity. And as soon as the blue line or the fast line crosses yellow line from the top, so over here it is crossing from the bottom, and over here it is crossing from the top. So as soon as it crosses from the top, it's a selling opportunity. Okay, so the next indicator is stochastic oscillator. Okay, so we have stochastic oscillator on our chart. So stochastic oscillator looks like RSI. So in case of RSI, if the data points are above 70, it is considered to be in overbought zone. And if the prices are below the 30 level, it is considered to be an oversold zone. But in case of stochastic oscillator, the level is 20 and 80. So the strategy using the stochastic is, so this stochastic oscillator have two features. The first is it tells you if it is in overbought zone or oversold zone, and similar to MACD, it also tells you the the prices crossover. So the again the blue line and the yellow line. So as you can see, the blue line is crossing the yellow line from the bottom. It is the level where you can buy, and similarly if the blue line is crossing the yellow line from the top information, you can sell from here. So if you would have sold from here, then prices would have eventually fall down. So this is stochastic oscillator. The next indicator is average direction indicator. Okay, so ADX, as we discussed, helps you to identify trend, whether the trend is strong or not. So you can see this, the level over here starts from 15 and goes up to 40. So basically the idea is, if this data point is about 25, it means the stock is trending, and if it is below 20, it means the stock is not trending. So for example, in this case, as you can see, the it's above 32 and it was not below 20, and again started going up. So as you can see, the trend is very strong. And if you have to look over here, the data points are below 20, and as you can see, this area over here, there's no trend. So this is what ADX suggests. Indicator to identify trend is on balance volume. I'll just put the indicator for you. On balance volume indicator uses volume as a data point. So if this data point or if this line is going down, it means there is more volume towards the sale as compared to the buying. Yes, and there's a downward trend, and you can see the same on the chart as well. So now what is happening over here is that now it has taken a break and it is bouncing back, and you can see the same in the chart as well. You can use this indicator as a confirmation of trend. So now if you can see over here, it's basically getting stabilized, but it is not aggressively rising. So once it is start increasing aggressively, you can confirm a reversal of trend, and on the basis of chart you can take your position. So we have covered all the 5 indicators that we wanted to discuss in this video. So I've tried to make this video short and simple. I could have added much more details on indicators, but as I discussed at the start of video, indicators are not useful in isolation and has to combine with the prices. So what we're going to do, when we're going to apply whatever we have learned so far, we're going to apply on live charts, and at the same time I'll tell you how to use these indicators efficiently. So that's it for this series. The part 6 is the last video of this series, and then from next week we will start working on live charts and apply whatever we have learned so far. Again, I thank you and hope to see you next time. Thank you.